private markets are approximately 5 times larger than the entire size of public markets. When we just look at market capitalization, private credit markets, private equity markets are approximately 5 times larger than the global stock market and global bond markets. So there's a huge diversification opportunity there that most investors, candidly, unfortunately, have not taken advantage of until now. Allocating to private markets is fundamentally about enhancing long-term expected returns. Now, why does that higher return exist? Let's be candid. These are illiquid investments. Often when you are investing in a private credit fund or a private equity fund, you are agreeing to lock up your capital for as long as 10 to 12 years, sometimes longer in the case of venture capital. So we believe that investors are being compensated through what we call an illiquidity premium. And that's why we expect higher expected returns on private markets. So I'm excited to introduce Aspen Partners. Now, these are fund-to-funds vehicles, and so what we are doing is we've created a vehicle to invest in anywhere between 8 to 12 underlying private funds to give our clients very broad diversification across high-quality managers. So what does this mean for you as a Mercer Advisors client? Well, you will be working closely in partnership with your advisor to determine whether or not an allocation to private markets makes sense for you, your portfolio, for your family, given your unique goals and objectives. One of the exercises that you and your advisor will go through is really determining how much balance sheet liquidity you have, how much you need, how much do you prefer to hold on to. Despite the diversification benefits, there's no escaping the reality that these are illiquid investments. So one of the things you and your advisor will be working on is to assess really how much liquidity you and your family require given your goals and given your preferences. For those of you who are new to investing in private markets, what will change? What does this mean for you? Well, you will see in your custodial statement a line item for your allocation to any private funds that you invest in as part of your Mercer Advisors portfolio. The beauty of the Aspen Partners funds is that it is one set of subscription documents, one K1, consolidated reporting, all built within your Mercer Advisors portfolio. When you invest in a private fund, you are committing capital. You are effectively promising to invest X amount of dollars in a private fund. You are giving that fund essentially a line of credit that you are promising to provide them as they go out and find companies to invest in. So committed capital is a promise to provide funds to the fund. Calling of capital is when they say, okay, send us a check or send us a wire for X amount of dollars on or before a certain date. So that's called capital versus committed capital. Now you may be thinking, well, gee, why does it take so long to invest capital in a private fund? Well, this is because the general partner, the fund that is that you've committed capital to, they are busy sourcing investments and underwriting companies. Remember, these are private companies. These are not publicly traded stocks that are already out there in the marketplace for us to go buy. These are private companies. There's a lot of due diligence work that needs to be done. So there's typically in a private fund what we call an investment period. That's the period over which the GP can call capital and invest the committed capital that you and all of your other co-investors have committed to the fund. That investment period is typically 1 to 3 years. So it could take some time to build out a very mature private markets portfolio. Again, it's best to have this conversation with your advisor and determine whether or not this makes sense for you and your family.